Top three things in my notebook this morning. Number one, the Japanese yen versus the dollar. Number two, European equities specifically, and then the price of oil. So first, on the price of the Japanese yen versus the dollar, it's an interesting setup, if only because we've had the most epic move in the U.S. dollar since 1997. And this is one of the big things we highlighted as a big risk, is that you get a reversal of that. So you're starting to get that in yen breaking out relative to the dollar above what we would call our immediate term trade breakout line of 107.79. So quickly, you get 105 yen on that, and that's a big issue because the Nikkei doesn't like that whatsoever. The Nikkei has a huge correlation to the yen going up or down, and when the yen goes up, the Nikkei goes down because the Nikkei doesn't like a strong yen. Point number two is Europe. I got up this morning, it's like, what are they going to do? What are they going to do? But if you look at the behavioral components of the bounces, this is where we learn the most in bear markets. And, of course, this morning when they tried to open Europe up, they only had the FTSE and the DAX up, and all the other markets started to break down, and then they started to break down faster. First Italy fell, then it was Spain, then it was Italy faster, then Greece resumed its crash, and so did Portugal. Don't forget that Greece and Portugal, their stock markets are now officially crashing again for the year to date, down 23.5% and 21% respectively. So, again, what's going on in Europe is called economic gravity. I don't think Draghi can change that. And, again, I think markets and our macro theme of European slowing is reminding you of that. Now, finally, on oil, oil's a huge problem because, again, it's a huge deflationary signal. Now, we call this the Quad 4, where both global growth and inflation expectations are falling at the same time, and you can see this in oil. The lack of an oil bid is one thing. The pervasiveness of the decline is another thing, and how many people who are tied to this from an equity market perspective is another thing on top of that, and those are your top three things.